live from the Malaysia Economic Forum in Kuala Lumpur. This is Inside with me, Haslinda Amin, as we dive deeper into the stories that matter with crucial context and sharp analysis. We're in the capital city of Malaysia, where there is a lot of optimism, a lot of momentum, a lot of buzz as we sit through this economic forum. And there's reason for that. They say this is an economy that's seen a massive turnaround. Remember that Malaysia has grown significantly in the last quarter of 2024. We're talking about a growth rate of about 5%, and they say that momentum can be continued in 2025. And when it comes to the currency, ain't too shabby. In fact, it's done pretty well. It was the best performer in 2024. Quite a turnaround for the currency, which started the year, kicked off the year pretty lackluster, a lot of pressure on the currency. But going forward, of course, it is that mighty dollar story. When you talk to investors, analysts at this forum, there's optimism that perhaps the momentum can continue because FDI continues to flow into the economy. There's also a lot of support from what is seen as the GLC's government-linked companies pouring in billions of dollars in a 5-year period, and they're expected to pump even more in 2025. So kicking off the year with a lot of optimism, priorities, and looking back with a lot of pride. And this is a country that wants to continue that momentum. I caught up with the Prime Minister of Malaysia very shortly in a short conversation, an exclusive conversation, and this is what he said about the economy.
We are able to sustain for some years now, now the second year. We hope for the best, but the geopolitical situation must be considered, all right?
And what do you think the Trump policies, you talk about geopolitical considerations, how do you think Trump policies will impact?
We hope for the best. We hope for the best because, after all, he's very pro-business. So let's be more optimistic and deal with it.
Malaysian Prime Minister Anwar Ibrahim speaking exclusively to us earlier, expressing confidence but also expressing caution. But of course, he said that Trump is pro-business. Perhaps that is the messaging that we're awaiting to hear. We also spoke with Malaysia's second finance minister, Amir Hamzah Azizan, here in KL. He told us exclusively that Malaysia's growth could exceed 5% this year, thanks to strong foreign direct investments and support from state funds.
I think we had a great year last year. GDP growth has come in a lot better than we all forecasted. We've beat the original budget target. Even Bangara revised their outward projection for GDP. And it looks like we'll probably cross 5% overall for the whole of last year. This year, I think that tailwind will still continue. I think we have a good base because foreign direct investments remain strong. And a lot of the activity that's generated is now playing out through the economy. Because of that, I think we are confident that we'll have a good year too this year. In the budget that we put out between 4.5 to 5.5 GDP growth. And I think despite the choppiness in the global market, where we are today, I think we've got enough resilience to ride it through.
I like the optimism. Can you put a number to it? You talk about 4.5 to 5.5%. Closer to 5.5?
Well, this year will be higher than 5. But as most finance ministries are fairly conservative, I think we'll remain above 5.
What do you make of the challenges from trade? I mean, this is a country that's relying on trade. I think it is 60-70% of GDP. And given that Trump policies could impact global trade, how might that play out for Malaysia?
I think the more important thing to remember, Malaysia is an open trading nation. And effectively what we want is an open market for everybody to participate in. We don't like to choose sides. And I think we've been able to navigate lots of economic positions over all these years and prove the point that we are a fairly open economy. Despite the maybe a much tougher stance along the way, the diversity of the Malaysian economy itself provides resilience along the way. So if you look at what we've built as a base, we started off with agri commodity sort of economy, move on into manufacturing. Now we've got services underpinning it. And the anchor businesses are also getting a bit more complex. Whether you look at E&E sector, semiconductor sector, the data centers that we've got in, they're all adding to economic complexity in Malaysia. This is important because we need to transition out of the middle income base that we're actually in. And the key is to provide better opportunities for our people so that they can grow and be able to enjoy the fruits of the labor that's come up. So I think the whole world is waiting with bated breath and seeing what's going to happen with what President Trump will be coming in. But I do hope that the principles of what we've had in the past, which is actually good free trade, will continue to exist because it's helped the world actually to grow into a much better form. And I am hopeful that we will get and be able to get people to understand that Malaysia is positioned as an open trading nation, and we will continue to be supportive of this going forward.
For Malaysia, it's been about fiscal resilience, fiscal consolidation. You're trying to build your coffers. From what you've said earlier, you've met your budget deficit for 2024, assuming that you will meet 2025 target as well. I'm just wondering, it is a fine balance. I mean, how do you spend and still manage to be physically prudent?
I think it's about being very creative in terms of how do you engineer the growth that's coming in. So I think historically we've always been strongly dependent on foreign direct investments to help, to spur, to bring technology capability, money into the country to build it up. But what we've probably now tweaked a lot more is actually dependence also on direct domestic investments. Because actually the financial space that exists in Malaysia is high. Our funds are fairly cashed up. And if I look at all the GLC, GLICs that actually act in that side, they have assets under management of nearly 2 trillion ringgit worth. And they continue to grow because we're still in a demographic dividend sort of basis. So people are still contributing more into the funds and so on. So deployment is easier. So what we need to do is to make sure it's orchestrated, whereby some of this money actually gets redeployed back into a Malaysian context. And I'm happy to see that the GLICs are also embracing that. They see investing in Malaysia is worth the effort. There are lots of opportunities that can be garnered in. They may need to do it in a different form, but they're positive of it. So we've seen, for example, what traditionally the GLICs will invest plus or minus nearly RM500 billion over a 5-year period. They're boosting it up by another 120 billion over a 5-year period. So that's a fairly significant step up. And they're doing things in a different form in order to anchor it. So again, creating different engines that are feeding this is actually very, very useful to underpin the growth forward. The second thing is attracting the right type of businesses and building an ecosystem that actually is supportive of that is very, very important. So when you look at the E&E space, for example, we started the E&E space probably in the 1970s. And over the years, we've been expanding. So new people have come in, but we've also creating a secondary ecosystem around it where local suppliers get integrated into the main supply system. So it's making it much easier for that business to continue to evolve because the supply chains are a bit more secure. So we understand that geopolitics shifts are actually occurring today and people are looking at friendshoring, nearshoring and all these things. And I think when Malaysia has a robust ecosystem, we then bring in a lot more investment inside it and we continue to keep the engine fresh along that side. The second thing, or the third thing that the government is actually doing is activating it. As you've seen earlier this week, we announced the JSEZ and we formalized that with Singapore. And it recognizes that both do better if we all collaborate and we don't compete with each other. And both can play on different strengths in order to shore up that. And I think it took a while to get us to that stage, but I think the alignment now is good. So that again becomes an engine of growth for both Malaysia and Singapore.
Let's talk about the special economic zone. There are huge targets out there. I think it's $26 billion added to Malaysia's GDP, 100,000 jobs to be created. These are huge numbers. Realistically, how soon do you think we'll see the benefits of this economic zone? I mean, when will it kick off in the first place?
I think it's important to recognize this one was not an overnight thing, right? It's been something that both countries have been focused about building alignment, because the most important is to align, to agree that this is possible, and therefore understanding what are the complexities of making it work and what facilitation we can do. And the facilitation could be things in terms of agreeing priority investments that need to be done, facilitation in terms of easing the movement of goods that across the borders, facilitation in terms of easing the movement of people across borders. And I think that investment that we all did in trying to get that alignment done eases the next stage.
Quite a turnaround for the economy, and that is, of course, being reflected in the currency. The Malaysian ringgit started off pretty lackluster in 2024, but ended the year really strong, in fact, the strongest Asian currency. Is the level of the currency reflecting correctly the status of the economy?
I think when I first came in December 2023, then my first 3 months was quite challenging, right? Everybody is looking and focused about ringgit. So, but the position that the government took, the position that Bank Negara took, was quite clear. These are things that we need to manage, and the ringgit will find a fair balance. But we can support some element by prudent policies and structuring. So we got some help from our GLICs in terms of supporting government initiatives and so on. So when they had excess profits, they brought it back. Yeah, so that created demand for the ringgit and so on along the way. But it was not the primary driver of why we did. It helped just cushion blows along the way. The second thing was making sure that as long as we can generate a lot of FDIs coming in, we can generate a lot of interest coming in, investments coming in, then the demand of ringgit actually helped. And of course, when the Fed started to cut interest rates, it helped also add momentum to that change. So alhamdulillah, we've seen the ringgit then appreciate a bit, nearly 3% by the whole of last year, and probably one of the only two Asian currencies that were positive during the same period. Going forward this year, I think we all will live in a higher for longer sort of environment, but the base drivers are still strong. Malaysia's FDIs are still strong, the DDIs are still strong, GDP is still holding, and these create a lot of anchor economic value that will help that balance better.
So you see the ringgit hovering at current levels through 2025. Is that a fair assumption, even against the backdrop of a mighty dollar?
I think we had a mighty dollar at the beginning of last year, right?
That mighty dollar has slammed a lot of Asian currencies, emerging market currencies.
But as long as the ringgit continues to get support coming in, again, economy continues to be strong, imports are measured, exports are growing still, and supportive mechanisms between Bank Negara and the GICs allows us better tools to use to cushion blows. But ultimately, one can manage the foreign currency position. One should not try to manage it too dramatically sharp. One should understand that the base drivers are more important. Create the economic drivers for it. Bring in the FDI, support the DDIs and so on, support the GDP growth along the way, then the currency will look after itself.
It does seem like the economy is in a sweet spot. Does that then mean Bank Negara can stand pat for the rest of the year?
That's a dangerous proposition for us to say. I think Bank Negara does a good job of actually understanding what they need to do and when they need to intervene. And their whole role is to make sure that there's stability inside the drivers actually manage along the way. And they will continue to do that depending on what the market indicators are.
Malaysia's second finance minister, Amir Hamzah Azizan, speaking exclusively to Bloomberg in what is a rare interview. The first interview since he took over that position. Of course, we're coming to you live from Malaysia Economic Forum. Huge attendance, more than 3,000 participants, all eager to find out if the economy's momentum is sustainable going forward. Let's take you to the forum where Economy Minister Rafizi is speaking at this point in time. Let's take a listen.
traditional method or mechanism to get infrastructure fund from the federal government can be long-winded. I mean, we have representatives from state governments here. You know, it's layer after layer. You have to go through the federal ministries, and then it went through a lot of budget screen before finally it comes to us at the Ministry of Economy. And because of that, the approach in the past has always been on greenfield industrial land. So, you know, if Johor wants to do this, Johor has to say, you know, I fork out money, this is the land, and then I have to bid for federal budget for the next 2, 3, 4 years, and then I build all the infrastructure, and then I will take another 10 years to populate it with investments. By that time, for all you know, Vietnam has beaten us to pulp. So we wanted to change it in the sense that if this were to be done as a private venture, right, you actually do everything investment by investments. We would like to work very closely with investors. You tell us what are you bringing, what do you need, and then we will then very quickly jump the queue and build the infrastructure. And instead of going through that rigorous annual budget screening, we have already set aside 5 billion ringgit for us to draw from that. And then if there is a need in the future, depending on, you know, the interest into JSSEZ, we can always put in more money set aside for the infrastructure charge.
Okay. The other thing is, even before this agreement signed, there's been quite a proliferation of data centers in Johor, right? When we see some comments about data centers, it's just a block of building using a lot of energy and a lot of water, and with little multiplier effect, right? How do you, explain to these people who are pessimists, so to speak?
There's a lot of debate about the value of data center, especially at this current stage of investment into Malaysia. As with everything else in life, there's good and bad. There's opportunities and problems that come with it. It's the same with data center. It guzzles a lot of power and also water, true. At this current stage, the huge investments that we hear of, a lot of the trickle effect basically went to the property sector and the construction, but not really the nitty-gritty of the server rack and everything. We don't have ODM in the country and so on. So there's a lot of imports of these goods now. But Malaysia is expected to be a powerhouse of data centers, not just in this region. If we follow this trajectory, it's going to be a global powerhouse. If you imagine 10, 15 years down the line, we have so many data centers. And as Dr. Chris Miller, I think, alluded this morning, I don't think this is reversible. This is going to be the trend in the future. Data centers is going to be a utility just like electricity, water, and so on. So it's going to expand. Now, in 10, 15 years' time, if we have so many data centers, and data centers will go through its life cycle. You need to replenish the server rack, new ones coming, the ODM has to be there. So there is suddenly an opportunity that can accelerate us leapfrogging the value chain. To Malaysia, my view is this, we take this demand on our energy and power system as a challenge. If anything, it means that we have to double down to strengthen and build more robustness for our energy sector, precisely because we need this. But if we are able to realize the potential to downstream our semiconductor, and instead of just doing back-end, we are hoping that we can start producing made by Malaysia GPUs and chips in the next 5 to 10 years then not only we create a new high-value economic sector that serves our own demand, we can then become a global player.
And of course, that conversation coming against the backdrop of Malaysia wanting to be the hub for data centers, the hub for AI. And we'll have more from the Malaysia Economic Forum coming up. Stay tuned next hour for my exclusive interview with Economy Minister himself, Rafizi Ramli, at the Times on your screen. Keep it here with us. This is Bloomberg. Welcome back. We're coming to you live from the Malaysian Economic Forum. Now, China's consumer inflation showing no signs of picking up in the latest setback to Beijing's stimulus efforts. Avril Hong joins us in Singapore with more. And Avril, of course, that continued effort to reflate the economy not quite succeeding.
Yeah, I think it's a problem of stimulating demand after that massive stimulus package in September. Now we're getting increasingly the signs that it's just not cutting it. You look at how consumer prices, the gains weakened for yet another month, and the CPI is nearing zero now. On producer prices, deflationary trend very much intact for a 27th month. So it really goes to show you how stimulus is just not quite enough working its way through the economy in China now, Has.
Avril, thanks for that. Let's get more analysis on China's latest inflation weakness. Bloomberg economist David Xu joins us from Hong Kong. David, we talk about that deflationary pressures. Of course, the risk is on household spending.
Well, generally speaking, it is the domestic consumption weak. And so if you look at the average of the CPI and the PPI, which is negative, it reminds us that China may still have a way, some time to get out of the deflation pressure. And maybe it will take more time than we expected.
That's what we've been hearing, taking more time. And when you take a look at the markets, Chinese assets are showing exactly that, those concerns of a spiral down. You got to wonder how China itself, how Xi Jinping is looking at these numbers and how he may respond.
Well, I think it's a clear signal for the PBOC that more easing is needed, and also the government need to take some concrete actions to boost the domestic demand, especially the household consumption. Otherwise, we don't have a very good or a silver bullet to get out of the deflation risk.
No silver bullet, but big stimulus, QE, that's what's needed. Realistically, is that coming or not?
Well, the QE is not something we are to talk about immediately, because China still have 1.5% policy rate. And we think that looking ahead into this year, we think more rate cuts are needed at least.
David, thank you so much for that. Bloomberg economist David Xu there. Still to come on the show. Protectionism and tariff walls are rising, set off by an intensifying U.S.-China trade rivalry. More insight next with Deborah, Elms, head of trade policy at the Hinrich Foundation. Keep it here with us. This is Bloomberg. Welcome back. You're watching Inside with me, Haslinda Amin, and we're coming to you live from the Malaysian Economic Forum. Now, in the currency market, the yen continues to hover around levels which brings the risk of government intervention. Avril's back with a closer look. And Avril, of course, we've been talking about intervention over and over again. It's a matter of when, perhaps.
Yeah, and I think some of our analysts have already talked about there's a diminishing return. The more verbal intervention you get, the more jawboning you get, the less traders actually think we're actually going to see that, sort of BOJ rate hike. And certainly if you look at the swaps pricing, this is really hinging on December, following the BOJ governor during the presser, sounding dovish, shifting focus on the wage negotiations, the shunto, and that really, shifts the bets that we're going to see a later hike from the Bank of Japan. And certainly this is against the backdrop of that greenback strength creeping back in, and comes despite the data out of Japan supporting the case for the Bank of Japan to hike rates. You look at the base wages, I think they climbed by the most in about 30 years. Labor cash earnings also were surprisingly firm. And all this is part of, the positive economic signals that Japanese policymakers want to see in order for them to continue the paring back of their ultra accommodative policy stance. And if you look at, what we're seeing from the December meeting, not only did Ueda talk about the wage picture in the country, he also flagged some of those concerns, uncertainties surrounding Trump's policies. Indeed, if you take a look at the Japanese stock markets today, you're seeing a bit of caution creeping in, and this is reflective of what we're seeing broader in the Asia Pacific. Nikkei down 1+%, similar declines on the broad-based gauge. Of course, among the stocks that we're keeping close tabs on, that of SoftBank, its unit arm, reportedly is looking to that takeover of Ampere company, and this is of course a chip designer that uses SoftBank ARM technology. We're seeing it also among the tech stocks that are on the back foot today in Japan, Has.
Well, Japan may be down today, Avril, but investors stand to say that it is a market that is attractive, a good way to diversify that portfolio. Now, we're watching Nvidia's biggest suppliers this morning following a Bloomberg scoop that the U.S. may further restrict its AI chip exports, along with those from AMD. For more, let's bring in Asia Tech reporter Annabelle Drulis. Bell, that stress, that pressure continues.
Yeah, but actually it's been sort of interesting. Yeah, we did see Nvidia, we saw AMD as well, slipping a little bit in after hours. But in terms of the market reaction in Asia, actually you're seeing it looking a little bit mixed so far. And that sort of tells me as well that there's a lot of uncertainty. Would these restrictions, if they are indeed announced, actually be followed through on when we've got Donald Trump back into the White House? But just spelling out some of the details here. So essentially, the US is looking at further restricting China's access to cutting-edge technology. And the way that they're possibly looking about doing this is introducing a three-tier system. So the new rules, as we said, could be announced by Friday of this week. But in the first tier, you would have, the US's closest allies. So you're thinking about parts of Western Europe, Japan, Korea, Taiwan, Australia as well, others in the mix. So these ones would have full access to AI chips from Nvidia as well as AMD. In the second tier, this is where it gets a little bit more muddled because you've got really large parts of the world, because the third tier, actually, just to note, you can see in the map, the third tier is really Russia and China, and then parts of the Middle East, parts of Africa, but Iran there. So they're not going to have really any access to these sorts of advanced AI chips. But the second tier, as I said, this is where it gets a little bit more confusing because it really is large parts of the world. And what the countries and the companies that are headquartered in them, what they could be required to do would be to open negotiations with the US government and to prove that they actually do have already some sort of relationship in place. They're meeting sorts of or certain types of human rights standards, for instance, or at least a credible plan for doing so. And that is the sort of three-tier system that, as I said, could be announced by Friday of this week.
Of course, the final push by Biden to perhaps limit Nvidia chips. You got to wonder, and where you are. What's been the reaction from Nvidia?
Yeah, I mean, as we said, the slip a little bit in after hours, but we did get a statement out from the company, and they're, of course, pouring a lot of cold water, you could say the least, onto this sort of idea. But the statement itself said that any sort of last-minute rules to restrict exports is going to be a major shift in policy, and it's not going to be something that has the intended effect. And actually, what has been one of the interesting sort of byproducts of this today that we're seeing is, as I said, mixed moves so far in the Asian chip names. But what is really gaining pretty substantially are the Chinese chip names. And that sort of tells you as well that really these efforts to restrict China's access can end up backfiring in some instances, because you see further investment from Beijing into the likes of SMIC, for instance, Huawei, to try and build up the domestic economy and the domestic industry so they don't need to rely on the US. So that was the reaction from Nvidia. No surprise as well, the Semi Association in the US said that a policy change of this sort of scope, this sort of magnitude, shouldn't be rushed out the door. But at the same time, we do know that there is broad bipartisan support within the US to stay hawkish on China, and many in Congress would say, for instance, that this is a serious once-in-a-generation moment to leverage the advantages of US AI technology to try and claw back companies and countries from the grips of Beijing.
Well, great perspective. Bloomberg's tech reporter Annabelle Drew is there out of Hong Kong. Now, protectionism and tariff wars are rising, set off by an intensifying US-China trade and tech rivalry. The EU is raising levies on China's EVs, while several ASEAN countries are introducing trade barriers and a flood of cheap Chinese products. Let's discuss this and more with Deborah Elms, Head of Trade Policy at the Hinrich Foundation. Deborah, good to have you with us.
Thank you.
It is not just US-China, it's everybody. I mean, everybody's in on it. It is about national security.
It is. I mean, I think what's happening here is the U.S. has started this ball rolling in a big way with the first Trump administration. And now you've got Trump returning to power at a time when the global system is also weakened. And so between Trump and the weak system, we're allowing behaviors that would never have been considered even 15 years ago.
That is Trump. It's also Biden. I mean, take a look at the moves he's made so far. That blacklist on Tencent and CATL, and now, trying to put a lid on Nvidia AI chips. I'm just wondering if this all would mean a further decoupling, not just between the US and China, but also the world.
It may, and I think that's one of the things that's been noted already here this morning in Malaysia, which is for export-dependent parts of the world, like Malaysia, the rest of ASEAN, et cetera, what does that mean if the world turns inward? And I don't think we've really thought through what that looks like, especially, again, for export-dependent countries and export-dependent companies. This is a very different world we're entering that none of us really have personal experience dealing with.
So how might this play out?
Well, there's a range of scenarios from extraordinarily alarming to slightly less alarming.
What's a likely scenario?
I think we will, within 2 weeks, when Trump becomes back in the presidency again, we will see tariffs back on the agenda in a way that they haven't been in a while. But it's not just going to be tariffs, and it's not just going to be for excuses of national security. It's around competitiveness. It's about the future, innovation, critical technologies, et cetera. This protectionist wave is going to become a sort of tsunami by as soon as the end of this month.
We talked about how Trump might impose those tariffs. There's optimism, though, that he will not push through what he said he would do, not to the extent that has been promised. 60% for China, 25% for the rest of the world. Is there too much complacency, optimism, or a misreading of how Trump might play this?
Yes, it's entirely too optimistic to think that this is just a bargaining chip. What I think he will do is impose tariffs and then potentially have a delay. So I announce that I will impose them. You have 3 months before they actually come into effect, for example. That would give time. Let me see what you're going to offer me. If the offer is good enough, I'll think about making a difference. Maybe you don't have all of the tariffs. Maybe we exempt certain sectors. So they're coming. They're coming on all of us. They're coming more for some than for others. Obviously, Canada, China, et cetera, is now in the front line. But they're coming. And so I think it's too complacent to think that somehow this is just about bargaining. It is about bargaining, but it's also about imposing tariffs, gaining the revenue, showing who's got the power, diversifying back to the United States. I mean, I think they're coming.
This is Trump 2.0. As much as Trump has more experience, you know, the trading nations, they do too. I mean, we talk about China, we talk about Canada, we talk about Mexico. These nations are prepared to push back.
Maybe. I mean, if they were coordinated, if we had a coordinated response to Trump, not necessarily from those three only, but if we had a more coordinated response to Trump, we might have a different outcome. But I suspect what will happen is that while it's in everybody's interest to work collectively, it's in my individual interest to work on my own. And so we will find everybody responding individually, and the net result is we're all much worse off. And I think that's going to happen in spades.
Is China prepared to push back, and how much is it prepared to push back? What are some of the tools it may adopt?
Well, I think the Chinese question is a good one because they were relatively, I would argue, relatively restrained during Trump 1. And I think the expectation out of the White House is going to be restraint this time around too. And I don't think that's going to happen. I think the world is different. I think China's in a different position. I think the U.S. is in a very different position. And so now, instead of a sort of push by the U.S. and a response by China that's much more accommodating, I think we will have much more conflict. And where that goes, I think, is unclear. It depends on how far and how fast the United States wants to push China and how far and how fast China's prepared to step back. But don't expect it will just be tariffs for tariffs. The Chinese will respond maybe with tariffs, but probably much more with other kinds of tools. Make their own entity list, have their own sanctions list, have their own policies around product safety standards, use the ability to enter the Chinese market much more forcefully than they have in the past. I think it's going to be interesting.
But it's also potentially the tool of devaluing its currency. We saw that happen in 2015. Of course, it's, I guess, two sides to the coin when it comes to devaluing your currency. I mean, what would it take for China to actually do that?
Well, I think that's a bit of a challenge because there are, you can make an argument for why this is a very sensible policy, but the consequences go far beyond, when you devalue a currency, far beyond the sort of narrow point that you were trying to make into a whole lot of other ramifications, including a lot of intended and unintended consequences. So I don't think that's going to be an immediate step taken by China because it's challenging and because of the consequences. But I think there will be a number of interim steps that the Chinese will try out depending on what it is that Trump actually does. And then we will end up with some kind of, hopefully, not a continuing escalation into conflict, but some kind of stability that happens, hostile stability. I don't know what the word would be.
We've seen how Elon Musk has become quite prominent in the days leading up to Trump returning to the White House. In terms of U.S.-China relations, what kind of role do you see him playing, and which way will he sway?
I think it's challenging, and it's not just Elon Musk himself. It's actually Trump's inner circle. They have conflicting pressures within themselves and between each other, and so it will play out in all different areas, from talent acquisition to intellectual property rights protection to straight up use of tariffs. Those tensions are going to be difficult to navigate, and since Trump is the ultimate decider, it's what he thinks that matters most. I don't know how much of a moderating influence Elon Musk might play relative to China. I think Elon Musk has bigger fish that he's interested in now than just China. But he might be able to pull it back some of the worst impulses of Trump vis-a-vis China. Or he may say, actually, my larger objective, which is still unclear, actually, does Musk want power? Does he want influence? Does he want government contracts? What is it that he's looking for? But whatever that is might be more important to him than dealing with the U.S.-China relationship.
In the end, it is bad news for trade. Global trade. In the end, it is bad news for global growth.
It is very, very alarming. And again, I think it's why here in Malaysia, you had the Prime Minister and the Economic Minister both start today by saying we cannot respond by protectionism here, and we can't respond by protectionism in this region. That's not who we are. That's not what's gotten us this far. And if that's the response that we think we should have, then we are really in trouble. Because where's the source of economic growth and development that we need if we all sort of go down in our hunker behind our sort of fortress walls of protectionism? I think it's a real risk for all of us.
In my conversation with the Prime Minister just earlier this morning, he talked about how Trump is pro-business. We hope for the best, but Trump is pro-business. Is that good enough? Good enough comfort? Is it comforting to know he's pro-business and things would work out in the end in the best interest of perhaps not just the U.S. but the world?
No. No. But I think that the U.S. is in a very different position to someplace like Malaysia, which is the U.S. market is very, very large, obviously. But the U.S. trade with the rest of the world is relatively small. 30%, something like that, is traded for the U.S. compared to Malaysia, Singapore, et cetera, where it can be hundreds of times. The Singapore GDP ratio is 300% trade to local GDP. That means trade is unbelievably important in this part of the world. It is less important for the U.S. So even if you say Trump is a businessman, he'll act in ways that help us, maybe not, because he's facing a very different environment than you are. You're very trade dependent. Trump is not. So when he acts in a business-friendly way, that business-friendly way could be, in fact, protectionism. I'm going to keep the 70% of American businesses that have limited trade very happy. That's a problem if you are the other side of that equation looking to do more trade.
Deborah, hang tight. Deborah Elms of the Hinrich Foundation will stay with us as we take a closer look at ASEAN trade relations, including Apple's efforts to lift a ban on iPhone 16s in Indonesia. Stay with us. This is Bloomberg. Welcome back to Inside. Indonesia has retained a ban on the sale of the iPhone despite Apple's $1 billion investment offer. The industry minister says Apple's plan to build an AirTag factory is not sufficient to meet local investment requirements, as it's only an accessory and not a smartphone component. Rival phone makers Samsung and Xiaomi have set up factories in Indonesia to comply with the regulation. Let's bring back Deborah Elms, head of trade policy at the Hinrich Foundation. It is so tempting, Deborah, to say that Indonesia is doing exactly what the U.S. is doing.
It is, in part because that's the playbook that we're now in. You can use the excuses of policy space. U.S. has done that now. Indonesia's done it in the past. It's easy to do it again. You can say it's about national security. U.S. is now arguing national security for everything. You can talk about local jobs, local content, local innovation. So once you've opened that Pandora's box in which you say, I get to do whatever I want because I think I'm justified in doing it, everyone else can do it too. And suddenly we end up with a system that just reverts back to really the law of the jungle.
The thing is, everyone is doing it. I mean, even Europe is imposing tariffs on China. I mean, if everyone is doing it, why not me? I mean, can you stop that?
I would like to think so, but it's going to be very hard because it does require coordination among a lot of countries with differing interests who would have to say, look, we recognize that as a group, we're all better off if we can stand firm and keep markets open. But individually, I have the incentive to do what I want when I want. That's what created, actually, the global trading system that we have today, was this recognition that if we did this on our own, we're in a disastrous position. If we work collectively, it's better. That's served us well, I would argue, for 8 decades at least. But now it's disintegrating. We're going back to that might makes right, law of the jungle kind of policymaking, and that is going to be a real problem for states that are not enormous and powerful.
You talk about responding as a group. There is a grouping here, ASEAN. How does it respond? How should it respond to the U.S.?
Well, the good news is that ASEAN already has the structure in place and has been working at this ever closer integration for 50 years. So it has the ability to collectively work together, to cooperate, to coordinate. They are literally holding these senior officials meetings this week here for ASEAN. They have that platform already in place, which is the first, most important part. Otherwise, you'd have to start from scratch. It would take forever. But now ASEAN has 50 years of promises and pledges. What could you do to make this work? Implement some of them. Let's start with the priority areas. Let's say we've been talking about this for decades. Let's actually deliver it at the border, behind the border, make ASEAN that integrated production base they talk about.
Having a framework is a great starting point, but it's not enough. If you take a look at ASEAN nations and their priorities, they have similar priorities in a way. Everybody wants to develop their capabilities in AI. Everybody wants to develop to be part of the EV supply chain. I mean, how do you work together and also compete against each other?
I think it's challenging, but for me, what I would like to see is this external crisis that is rapidly developing becomes the impetus for people to say, while I would love to have the whole supply chain for electric vehicles domestically, realistically, that's not going to happen in all 10 members of ASEAN, or even in a handful of members in ASEAN. We have to think of ourselves as an integrated unit. We have to agree to share production. We have to agree to share manufacturing. Now, that is not easy. It is not easy domestically. It's not easy politically. But if we don't do that, we're going to be picked off one at a time. We're too small. We're too unimportant. We have to rely on that integration, or we are really in big trouble.
In your conversations with the leadership in this part of the world, is that the thinking they're adopting? I mean, how are they looking at it? I mean, how encouraged are you ASEAN will work together to counter the stresses from the U.S.?
I think I was heartened by the language I heard this morning from the Prime Minister saying, you know, cooperation, collaboration is crucial. That's very, very helpful. So that's great, especially as ASEAN chair. Again, it requires that sense of crisis, I think, for the other members to say, you know what, in fact, we're going to have to tamp down some of our potential domestic concerns, and as much as we can, it's not going to be 100%, but as much as we can, actually operate as a unit in order for us to be successful. And that is not going to be easy. There will be pockets where that doesn't work. And it could be, you know, the Apple iPhone in Indonesia, for example, could be one of the disappointing outcomes. But if the rest of ASEAN in other areas could cooperate, the results would be much better. And you'll continue to get economic growth and development in this trade-dependent region.
Trade is at risk at this point in time, and you got to wonder, Deborah, the role of the WTO, where it goes from here. Deborah, thank you so much for your insights today. Deborah Elms of the Hinrich Foundation, and of course, we'll have more from the Malaysia Economic Forum coming up. Of course, that exclusive interview with the Malaysian Economy Minister Afizi Ramli at the Times on your screen, and of course, we'll get getting insights on everything to do with that economic zone signed between Singapore and Malaysia, and of course, the outlook for Malaysia as a center, as a hub for chips, as well as data centers. Of course, we've been coming to you live from the Malaysia Economic Forum. Horizons Middle East and Africa is next. Do keep it here with us. This is Bloomberg.